Ladies and gentlemen, welcome. It's the 15th of June, 2016. This is Christopher Aaron, and we will be looking at the big picture overviews for gold, silver, the precious metals, mining equities, and putting that all into better perspective so that you, if you are just approaching this market for the first time, can make a better decision about how to best invest in this market. It looks like things are really picking up here, and we expect to have higher prices by the end of the year than currently. Significant long-term bottoms were put into place last winter, and we are just starting to see the ramifications of that as the action begins to heat up. I did want to say really quickly, if you sent me an email, if you were following the last few videos about the silver trade, the public silver trade that we made over the last few videos, and if you sent me an email expressing interest in getting more of those updates in the future, that is still something that I'm considering, investigating software and hardware and that sort of thing. My goal would be to have that set up before silver breaks through 1875, because I believe the surge that we see above 1875 is going to be quite large in comparison even to the surge that we've seen over the last few months, and that will be one that is probably going to be very profitable to trade using short-term trades. If you sent me that email, I did get it, and thank you for that. I am unable to respond to every single email, but just know that I did get it, and I'm putting that on a list, and when I have everything figured out, depending on if I decide to set that up, I will contact everyone on that. So thank you again. We will be putting everything into perspective that should help you make sense of these markets depending on your risk and reward tolerance. So stay tuned for that at the end. So there was a Fed meeting today which had some impact on the market. So we will look at the short term here very briefly, but then I want to zoom out to the long-term perspective. Basically, the Fed today decided to leave interest rates the same, unchanged, still at all-time lows, two generational lows between 1/4 and 1/2%. So interest rates are still artificially suppressed. And of course, we know the only way the Fed can keep rates so low is by continuing to print money and to buy bonds with that money, which drives the inverse of the price of the bond being the interest rate down. So we see today that the Fed left interest rates at that 0.25 to 0.5%. And as a result, gold had a bit of a surge today. A nice gain here, about $10 from the day before. And switching over, we see silver continue to move higher. So this basically constitutes the surge of the silver trade that I was anticipating about a week and a half ago. Now, I had closed out the remaining part of my position back last week, and I have no regrets about that. You can never have regrets about taking a nice profit on a short-term trade, because especially with options, you know, even here, if the price, as it was consolidating for a few days, the options have a time decay value. So it's not always in your best interest, if you're trading options, to hold the trade even if the price moves a little bit higher, because the time decay can offset the gain in the price. So anyway, back to the action here in silver. Nice close here. We do have some mixed signals for the short run. And this is just to say that we're approaching significant resistance levels. There were some mixed signals coming from the mining equities over the last few days. So it's uncertain in my mind whether or not gold and silver are going to be breaking the important resistance levels that we have been watching for, which for gold, as we know, is 1305, and silver is short-term 18, but medium-term 1875. It's that zone that we want to see broken. So for anyone who is new, if you are new to the precious metals, here is the big picture. We really must keep this in mind as we focus on these short-term trends here that we see developing. The big thing to keep in mind is that gold made a high in 1980. 9 years after Nixon removed the dollar from any gold backing, and it was free to trade for the first time in several generations. Gold went from $35 an ounce and hit this line, this yellow line up here at $850 an ounce over 9 years. Gold then went down for 21 years into 2000, 2001, and began to rise out of that time period in the early 2000s. So when we're looking at this entire period here below the 1980 high, this is really almost a 3-decade consolidation. Gold then broke out in 2008, falling back below that level again in 2009, only to break out for good in late 2009. Gold then had a 2-year surge up to 2011 before it came right back down to this green retest zone that we highlighted about 6 months ago as a possibility, and this is looking increasingly likely that this was the final low for the bear market. So the important thing to keep in mind with gold here is that you had a multi-decade consolidation, a spike higher for 2 years, and a retest of that zone. The retest itself has just proven successful and has just broken out of the short-term downtrend here shown in turquoise that had formed during the later part of the decline. So what we can say here is that markets that consolidate for 29, 30 years and then break out do not typically finish the final advance in just 2 years. The amount of time under this level, 29 years, and then a 2-year surge, tells me that this was only the initial surge from this breakout. So we saw an initial surge, a retest, and we are now getting ready to accelerate again over the course of the next several years as a first target to retest this level, and then I expect to be moving beyond this level, beyond the 1900 figure. I still believe that is several years away, though, however. Now, in comparison, silver is still below its 1980 peak. Silver peaked at 1980 at the same time as gold peaked at $850. Silver peaked at $50 per troy ounce and came all the way back down into the threes in the 90s and the early 2000s before starting to round out of this long bottom and seeing these price spikes every 2 to 3 years, increasing price spikes, 4 in a row, until the current bear market has taken us back, forming a higher low than the 2008 low, which was higher than the 2004 low. So we have a series of basically increasing highs and increasing lows. So on a relative comparison, the big point to keep in mind is we can see silver much more volatile over the short run, but it's still below its 1980 peak, which means silver would have to be somewhere in the vicinity of $75 an ounce right now to match its relative comparison with gold using this important figure. We do believe that will happen at some point over the next several years, 3, 4, 5 years perhaps. We can see these things take time to play out. So silver probably has a higher level of reward associated with it if you have a long-term time horizon, but these drawdowns, these spikes lower, which there will be more along the way, can really wash people out and can really move 10, 20, 30, 40% lower over the course of a year. Looking at another aspect of this over that exact same time frame, this is the XAU index of gold and silver mining companies. These companies are leveraged to the prices of the metals. So typically when the price of gold rises, let's say 1%, almost like the rise today, we will see something like a 2 or a 3% rise in the valuation of the precious metals mining companies. Same thing for the silver mining companies. Now, the 35-year chart here shows that we have just rounded out of a generational bottom. Astonishingly, the mining equities fell in the bear market all the way to levels seen at 2000, 2001, when gold was $2.50 and silver was $3.75. So this multi-decade consolidation we expect will be breaking to the upside above the long-term resistance level at some point, probably corresponding with gold approaching 1900 again and silver approaching 50. And then when those metals move higher, the mining equities will probably use this level here between 200 and 230 as a floor as opposed to as a ceiling for a move that could last 5 to 10 more years beyond breaking this level. So the mining equities are even more volatile than silver and can produce even more gain if they are chosen correctly and if they're held with the appropriate time horizon, and if you don't get washed out on these short-term spikes lower. So those are your major options in front of you if you're considering this sector from a long-term investment perspective. Now, the big thing to keep in mind here is that with precious metals, as well as with really any investment, your reward is almost always proportional to your risk. So the forms of investing that carry the highest reward also carry that highest risk. And the lowest risk typically corresponds with the lowest reward. Now, what we talked about in the last few slides, you will probably be able to understand how we're going to put these into this triangle here. And I really made this as a triangle just to say that for most people, it is better to start with the forms of precious metals that are the lowest risk and the lowest reward, because these things, gold will never be worthless. It never has been worthless. It never will be worthless. So there is no risk that gold will be worth nothing, barring an Armageddon scenario of some sort, but I am certainly not planning for that. So it's generally recommended that investors start with some physical gold and silver to invest in. Moving above that, we have silver. So silver, as we said, is going to have a slightly higher reward and a slightly higher risk than gold. Some people choose to invest only in silver because they are comfortable with that. They're saying, I'm going to be holding this for 3, 4, 5, 10 years, and it's okay if the price goes down 30 or 40% because they're just going to buy more. Next, we would have the mining equities. Again, these are going to provide even higher reward, but even higher risk. These things can move, can double over the course of a week or two, as we have seen, and they can also drop by 30 or 40% over a couple of days. Really, really important to understand what you're getting yourself into as you move up the triangle. Finally, what we did over the last few weeks, these short-term trades should most likely represent the smallest amount of your capital that you are choosing to allocate, because these are going to have very high reward and very high risk. And of course, underneath this, there are several possibilities for short-term trades. You can trade unleveraged, and you can trade slightly leveraged, and you can trade extremely leveraged. So we'd be working our way all the way up here to the highest reward and highest risk with those high leverage investments. So the big thing here, if you are watching this and really considering precious metals for the first time, or perhaps considering diversifying into some other forms, is just understand this paradigm here. Understand that things that move higher can also move lower. and things that can never be worthless should probably form the base of your precious metals portfolio. How do you figure out the proper ratio of this? Well, there's tons of fundamental analysis you can read. There are books. There are investment advisors. Typical investment advisors generally know very little about precious metals, which was the impetus for myself to start this business. However, the most important thing is this. I believe, know yourself. What kind of investor are you? What kind of person are you? What kind of risk tolerance do you have? Are you comfortable with large swings? Do you want to try to hit not just a home run, but a grand slam and change the course of your life? Or are you looking for slower and steadier gains over the next few years? Know yourself, and then you will know the proper form of investment to take. So thank you once again for watching. We have the important technical levels at 1305 for gold. And the first resistance level we're watching very closely on silver is 18, above that 1875. Very important to watch these levels. My take on it right now is silver is probably not ready to move above that 1875 level. But that said, if it does, I have a holding that I'm comfortable with. So I never trade my long-term holding, even with these little up and down moves. So thank you again for watching. We will have another update a week from now. And stay tuned. It's going to be an exciting fall, I believe, as the seasonal strength starts to play in a little bit with the metals. Thank you and have a nice evening.